We all know that investment is a super powerful tool, but the truth is the earlier you start, the better it will be, as you can reap the rewards of compound interest. But what actually is compound interest, and how does it build real long-term wealth? Well, we're going to be speaking about this today. Let's start off by asking what compound interest actually is, because this super powerful tool that we've just touched on, we need to actually understand it fully. Compound interest can be described as when you earn interest, not just on your initial investment, but also on the interest as it accumulates over time. This is also something that can be referred to as interest on interest, and it can lead to exponential growth. How does it work? Well, part one is the principal. This is the initial amount that you invest. Then we need to factor in the interest rate. This is a percentage that your money grows annually. Then we've got the time factor. The longer you have your money invested, the more it can grow. Frequency is how often interest is calculated. It could be on a monthly basis, a weekly basis, a yearly basis. This is what we would refer to as a frequency. And there's a real power in this game of starting early. And we're going to speak about this as we go on. But the earlier you start, the more time your investment has to grow. An example of this is two investors as we've laid out. Investor A starts at 20 years old and invests for 10 years. Investor B starts at 30 years old and invests for 30 years. Results show how starting early gives a significant advantage, as the first investor would have had more time to start building wealth, and the return on investment 20-30 years down the line would be significantly greater than it would be for investor B. It just goes to show. Here's an example of real life growth over time. The example is investing $5,000 annually at a 7% return for 30 years. The final amount is going to be over $500,000, most of which has actually come from the compound interest if you think about it. Because as the interest grows, as the investment grows over time, then interest and interest, we are naturally going to see this number continue to rise. And the longer that we can leave it, the higher it will go. Each year, the number kind of grows exponentially. It's funny to see over the course of 20, 30, 50, 100 years, for example. There are a few tips here for maximum success. Start as early as possible. This is exceptionally important. Be as consistent as you can with contributions. Reinvest as many earnings as you can. Avoid unnecessary withdrawals if you can, and choose your investments to have solid growth potential, as all of these will help you to make the maximum return that you can. There are a few myths about this investment method that you need to be aware of. Number one is that you need a lot of money to start investing. This is not true. Think about it. The more you can have, the more you can start with, the better. But realistically, it's always going to be as beneficial as possible to grow what money you have. I would rather make a 10-20% return, let's say per year, per decade, on my money than not. So it's always better, if you're informed, to start investing than to not even try. Myth 2 is that compound interest only works in savings accounts. And the truth is that oftentimes it's probably one of the worst places to have compound interest, because with inflation being 5, 6, 7% in some places, having a bank that has a compound interest rate of maybe 2-3%, especially when you compare it to the stock market, which can have 7 to 20%, the banks are often not the best place to have this. Myth 3 is that it's too late to start investing. Similar to number 1, the truth is it's never too late, and it's always better to try grow your money than to not. Why does compound interest, though, beat simple interest? Simple interest grows linearly, whilst compound interest can grow exponentially. It's not a graph like that, a linear graph, it's a graph like this. It really can rocket up. Example 1 is investing $1,000 at a 5% return for 10 years. If we invested it simply, we'd have $1,500. However, over compound, we'd have 1,628. And the funny thing is, the longer this period is, the higher the gap will grow. It's a great way to start building wealth today. Compound interest is a powerful tool for growing wealth over time. The key is to start as early as you can, be consistent with contributions, and think long term. Remember, every small step adds up to big results.